Welcome to another episode of Millennial Investing Explained. Here's today's question. Along those same lines of taking a risk, can you talk to us about the idea of someone staying in a corporate job with a stable income, but not really being scalable, and then on the other side of it, where you could leave a stable job and go into a riskier job where you have a much more opportunity to scale, whether it be through a side hustle or going to work at a startup or something along those lines. Talk to us about the ability to scale an income versus just being stagnant.
Yeah, sure. So I think you have to kind of just take a realistic assessment of the situation. So if you're in my case, there was no realistic path forward to a dramatic change in income at my job at Dish Network. It just was not possible, right? I was making $48,000 a year, and there's no route to earning over $100,000 a year within the next 3 years, right? Maybe probably within the next 5 years. So I think that self-assessment needs to be undertaken at the first point. The second thing is, okay, so how do I earn more money in a rapid fashion? Change your dollar per hour output. I think that's where you have to go in and take this concept of risk, right? And risk, I think, is very interesting because when I was at my job, I was earning $48,000 a year, but I was only spending $20,000 or $25,000, right? So was it risky to take a job that paid less but had higher upside for me? I don't think so. I think that was an opportunity, and that was a high probability bet. I had much higher odds of having less wealth 5 years further out by not taking some other opportunity with scalable income potential than if I had stayed at that job. So my risk was actually higher, in my opinion, with that job. Now, most people do everything in their power to get the highest possible base salary, and then they spend basically all of that and have just less than 1 or 2 or 3 months liquidity in their bank account, right? So when you do that and you take a job that pays less but has higher upside, that is risky because you're at a very serious risk of running out of cash. So I think, what is my advice? Spend way less than you earn, stockpile a lot of cash. So you have a long, what I call financial runway, which allows you to survive without the need for wage income. These things that we're talking about as risks and the income front actually are more opportunities. If the odds of success are far greater than the risk of failure, you cannot tolerate even a little bit of risk of failure, you're going to miss out on millions of opportunities.
Yeah, I think that's so good. And I think what you said there really flips a lot of normal thinking on its head, where a lot of people think that taking a lower base salary with more upside is more risky. But like you just said, it's actually not. And the first point of that is you need to be able to get your spending under control so that you're able to take advantage of those opportunities. And you need to think about it from a risk perspective, like you said. Is it really more risky to lower your potential income where you could earn much more? So you really need to be able to define risk and see what it means to you. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.